Hello, guys, and welcome back. I'm Roy Spencer, and we're talking here more on Roy's investments about how to handle a loss. So, when we're walking through a loss, like losses happen to everybody, but the key thing is we're looking at how substantial are these losses. We want to limit the amount of massive losses that we have, and we want to learn from our slight losses. So when we look at it, we want to see, okay, well, what happened? Did we underestimate the stock's ability to to fall off? Did we not see some news coming? In the case of what's been going on recently, there's been increased fears that interest rates are going to go up. Did we not look at that? Did we not look at that news in terms of like what is going on in terms of like the stocks around us? Are we seeing how that's playing into the tech stocks and other stocks that are in our market? Was it something like that that caused a massive loss, or was it something more so within the company? And then you got to boil it down, like how big of a loss is this? And we got to limit our big losses, and we've got to understand our smaller losses. And smaller losses are the place to be, because even if we have these smaller losses, we can hop back in at a later time. And if it's not that big and we still have that same belief that we have in the company, we can roll it down and we can roll under. So let's say I'm trading Workhorse and I have a loss on it because the company falls, and I'm trading it at $13 and it rolls down to $12.50 or something like that. Well, that's not too big of a loss. That's not going to feel great. I'm not going to go for a jog afterwards and smile at everybody. I'm probably going to be pretty upset, but like the ship didn't sink. So we still have money to get back in. So if we believe that, at that point it's like bottoming out and we're able to find our local minimum again, and, we don't have that news to like kind of tell us to trade off, then maybe that's a good time to hop back in. That's not a substantial loss. But when we're looking at massive losses, we want to consider like what happened. And that's where we get to on our next page. Why did the loss happen? This is the golden question. Did something fundamental change about this company? If I'm trading Apple and they have a loss and I look in there and they say, we're not selling phones anymore, I'm going to be like, what the hell? You gotta, something fundamental about this company. Did it change? Or is it something like, oh, well, we have to increase costs because, we don't have enough people working right now in America. So to like get the cost of our phone, we have to increase the cost of that, which is causing us to increase the cost of what we sell the phone at. That's a temporary thing. Eventually people are going to go back to work. That'll work itself out. And that might be a good investment still. So we got to look in, we got to see like something like when we're looking at Workhorse, did it lose a massive contract to a competitor? The answer was yes, back in the beginning of the year. And therefore it took like a substantial loss. And at that point we need to reconsider what happened. But other things that come in from like the fundamental side or like the intrinsic part of the company, did we see something come out about, the news of the company faking sales? That happens all the time to new companies just because they want to prove themselves in the market. Did somebody from like a CEO or something like that suddenly resign? That's always something to be concerned about. People don't just like randomly resign. There's usually pressures within the company that are telling them that. So, these are things that are tricky to look at, but like might cause us to step back and be like, okay, this is concerning. This will affect our investing style, but this will also invest our trading style, because trading is short term and we want the company to sell off and let that sell off happen without us being there, and then hop back in when it stabilizes out and gets that local minimum that is identifiable again. But that's it in concerns of like fundamental changes. There's other things where it's just fluff or just facing sell-offs because of just, news that, companies come out with. One of the things that companies come out with and say is, they have these earnings where they come out and they talk about how much money they made in a quarter or in a year. And they say, well, we didn't get the amount of revenue that we had from last year, but, we're working on this product and this product on this product. And then inevitably the company sells off on that news because it missed its projections. Or, was this company super red hot, when we were looking at like AMC or GameStop? This company was red hot. and it has no fundamental basis when we're talking about it there. So we're just looking at a purely like, trade basis on this point. But, it went through a period where it's red hot and it's going up every single day. And then, it cools off. So is it something like that where you just need to give it a minute to have space to cool off and then get back in on it when it gets red hot again? These are all things that we have to look at, and we have to understand where we went wrong on this. Did we just guess incorrectly, or were we not able to project what was going on quite right, stuff like that. And I want to leave you guys with this. Trades are risky. It can go up and down, and it's gonna be hard initially when you start trading. But what we need to do is we need to keep the ship afloat. That's our ultimate goal. We want to make money and keep the ship afloat while being risky, because losses happen to everybody. But to become better, we have to look at it and understand why, and look into the patterns of the trade, and also like where our fundamental analysis went wrong. And then it's very key to like keep your mind clear when you're trading, because like there's so much stuff that happens, it can pounce in, take you by surprise, and you can sell just with your emotions, and that's where you start to lose money and not make the profit that you should be making. So this is why I recommend meditating when you trade and taking time to clear your mind and get that clarity, because we're trading based off of facts and not based off of emotions. And that's going to help you guys become better traders. Thanks for tuning in.